What's up everybody? Welcome to the Stocks channel. In tonight's episode, we'll do some stock market technical analysis. We see the S&P 500 broke above our trend line but still failing to form a new all-time high. Before we get into the charts, please help me out by smashing that like button and go ahead and subscribe if you're new so you can follow along with all my daily updates. First, we'll take a look at the S&P 500, so let's go ahead and crack open this chart and see what's going on in the stock market today. Alright, so first up we'll take a look at the SPX, and this is the chart we had from last night's episode where we were talking about these resistance trend lines and how they've been so critical in calling the market top on the S&P 500. You could see back on September 1st, we did break above the resistance trend lines, and then we had that sort of melt up where we formed a brand new all-time high on the S&P 500. However, we now know that that was a false breakout, and then we had this huge correction afterward. So right now, we need to look at the possibility that this potentially could be another false breakout above this trend line, and we can see that we did fail to form a new all-time high because we got rejected at that resistance level. So like we talked about last night, we don't want to chase breakouts because there's a chance that they could be false breakouts. So how do we not chase this, and how do we know when the breakout is real? Well, that'll be because we now broke above resistance. We should break out above here, come back down and test these resistance levels as support. If we get a bounce off of this previous resistance as support and then start heading higher, we will know that this is the real deal breakout, and it is likely that we're going back into a brand new bull market. But you don't want to chase the breakout because it's also likely that we just come up here, form a new all-time high, and then just get flushed out and have another big correction to follow. So we want to be patient, and we don't want to chase the stock market, and we don't want to FOMO into something. We can see coming from the lows that we've gone a long way in a short amount of time, and we've been going up in practically a straight line. So there's no reason to FOMO and chase this if we're not already in the market at this point. We're just being patient, and we're waiting on the sidelines for the next buying opportunity. So let's jump over to our SPY ETF, and we can see that the price action and the trend are still extremely bullish, and there's still price action well above the 5 EMA. We've gone very far very quickly, and we can see that the 5 EMA is still basically going up in a straight line. So we're getting into these very strong resistance levels, and it's very likely that we need to pull back and test support before going any higher. So we're still bullish, and we think the stock market is going higher, but that doesn't mean we're not waiting for a correction and a better buying opportunity. We don't want to chase something that's gone up this far, this fast. If anything, we're selling and we're taking profits at these levels. So right now we're looking for the potential that we could pull back somewhere around the 0.382 Fibonacci retracement level, which is somewhere around a SPY level of 348. If we start breaking below that level, we could find support at the previous resistance trend line, which is just below the 0.382 Fibonacci retracement level. This could be our first great buying opportunity if we start to see a bounce, because it's likely when we get a bounce off of one of these levels that we're gonna make another attempt at these resistance trend lines and form new all-time highs. Again, we talked about this last night, but these trend lines go all the way back to 1987 and 2009. So they're decades long in the making, and we're not gonna just get up to trend lines like this and attack them 3 different times and not eventually try to break through for good. So there's definitely a lot of bullish price action and bullish sentiment that keeps driving us back to these resistance trend lines, and eventually we're likely going to break through them and form new all-time highs. So we're bullish on the S&P 500, but we're expecting a pullback somewhere between a 0.382 Fibonacci retracement at 348 and a 0.618 Fibonacci retracement at 338. Now don't forget, a 0.618 Fibonacci retracement will also close the gap that we have at 338. There's no guarantee we have to close that gap, but that could be the best buying opportunity that we have on this chart. There's no doubt that the trend is bullish because that 5 EMA is trading well above all of the moving averages, and we also have that medium-term bull trend because the 20 simple moving average and the 50 EMA are positive sloping. So bullish price action and bullish trending tell us to be buyers of the dip, so we're just patiently waiting for that pullback that we could get very soon. Next up is the Nasdaq 100 QQQ ETF, and we see the Nasdaq 100 is in a slightly different scenario because we already did get that pullback on the Nasdaq that we're waiting for on the S&P 500. The Nasdaq 100 QQQs came well below the 0.5 Fibonacci retracement level at 283, and we started squeezing the gap down here at $280. Now the gap on the QQQs ETF won't close till a price target of 276, and the 0.618 Fibonacci retracement would have taken us down to 279. So we got within striking distance of that level and the 50 EMA, and we did get that confirmation bounce today, with the Nasdaq 100 going up well over 2.2% today. So you can see that the S&P 500 is more bullish than the Nasdaq right now, and we likely saw a huge rotation of people selling tech stocks and rotating into the industrial sector. Now, one thing to note on the triple Qs is we are back into our consolidation wedge, and we haven't broken out above the resistance trend line just yet. We see here that we had one of those false breakouts because that resistance did not act as support on the test. So it's likely we could get back up to this resistance trend line and start heading back down to our support trend line. And then we would close all of the gaps, extend beyond the 0.618 Fibonacci retracement, and we're likely to start heading higher and break to new all-time highs if we do get that scenario. Now, it's also possible this was the dip and we're now getting the bounce that will take us to new all-time highs on the Nasdaq 100. So we are starting to generate upside price targets on the triple Qs, and the first price target I'm watching right now is this $300 level, which is a 0.618 Fibonacci extension. If we break above 300, we're likely going to new all-time highs above our previous all-time high at $302, and we could get to our next Fibonacci retracement level at $312. So remember, in order to get to those price targets, we need to break out of these resistance levels somewhere around $291, and then we'll have another resistance level somewhere around $294. So only time will tell if we see the Nasdaq 100 heading higher, and if tech does start heading higher and we don't start getting a dip on some of the other sectors, the S&P 500 is likely to just keep melting up before we finally see that dip. So next up is the Dow Jones DIA ETF, and we see the Dow Jones also looking very bullish and still closing up near all-time highs. The previous all-time high on the Dow was rejected for a test today, and we did close lower, but this shows that we're getting that bullish price action because the Dow is now pushing up against previous all-time highs. Now, the biggest concern on the Dow DIA ETF is, of course, this gap below, and it does look like that gap will close if we get a Fibonacci retracement of 0.382. That'll bring us down to the 284 price target, and we could also find support at our previous resistance trend line down around that area. So right now, the Dow definitely looks like it needs to cool off some, and it's likely that we're going to close this gap somewhere around $284 before we do finally get another test of the all-time high resistance level. So if we get a dip down to this level and close this gap, we could find significant support there and start bouncing and get another attempt at the previous all-time high. This could be the time that the bulls break through on the Dow and finally get that new all-time high on a closing price for the daily chart. So the Dow is definitely bullish because we got that extreme bullish price action and that strong bullish trend. So we're also looking for opportunities to buy the dip. Next up is the VIX, which is our fear indicator. And if the VIX is heading lower, we expect stock prices to continue to go higher. And that's exactly what we've been seeing with the VIX continuing to head lower. Like the stock market has been going up in a straight line, the VIX has been going down in a straight line. And we also see the VIX closing down over -5% today and closing below our support level at 24.8. So fear is definitely leaving this market, but that doesn't mean we can't see a bounce in volatility and a short-term pullback. So while this is good news for the stock market bulls, there's still a little bit of risk at these price targets, and we're likely going to see that dip soon on the S&P 500 and the Dow Jones. Next up is Apple stock, and we see Apple broke out of our resistance trend line today, and we're starting to see that bullish trending and that bullish price action yet again. So the price action is back to closing above all the moving averages, and we're finally starting to see that 5 EMA make some separation from the other moving averages. The 13 EMA is also crossing above the 20, so all of the moving averages are now stacked to the bull side. So Apple is that market moving stock, so if Apple's starting to head higher and going into a bull market, it's likely going to help carry the rest of the stock market with it. Next up is Amazon stock, and we see Amazon in a consolidation wedge just like the Nasdaq 100, and we are testing this support trend line again, and we did get a confirmation bounce today. So it's possible that Amazon is going to continue to bounce and head back up towards our resistance trend line somewhere around a price target of $3,400. Next up is Nvidia stock, and we see Nvidia also consolidating, and we did get a false breakout to a new all-time high followed by a correction. So it looks like Nvidia is finding a support trend line, and we did get that confirmation bounce today. So it's likely Nvidia can come back up to this $571 level and try to form another new all-time high. Next up is Tesla stock, and we see Tesla still consolidating and looking very neutral, but it is closing above the 50 EMA. So that's not extreme bullishness, but it's still holding the bears away for now, and it looks like the Tesla bulls are still on vacation, and there's still not a whole lot of people jumping into Tesla, and we're not getting that bullish trending or the bullish price action. So right now, I would stay away from Tesla because there's not a lot of trending, and there's really not a lot of clarity whether Tesla is going to go higher or lower right now. So the best thing to do is just sit on the sidelines and wait for the next opportunity. Next up is the US dollar, and we see the dollar did get a bounce today, but we are still getting price action, getting rejected below the 20 simple moving average. we still have bearish trending and we're still closing below the 20 simple moving average. So we have to give the edge to the bears on the dollar and assume that we're likely going to see that bearish trend continue and the dollar continue to head lower. Remember, a weak dollar should be bullish for the stock market. Next up is gold, and we see gold still holding up around that 1860 support level, and it looks like we're still just waiting to see if gold is going to bounce and continue back into a bull market or break down below 1860 and head to our next support level at 1809. Next up, silver, and we see silver holding up above the support trend line, and it looks like it's still consolidating and it's hanging around all of the moving averages. So when we see price action consolidating around the moving averages, it's like building energy in a spring, and we're likely to see a huge move on silver to the upside or the downside very soon. We don't want to make any assumptions, and we just want to watch it and see which direction it's going to break, and then we'll know which side of the trade we want to be on. Next up is Bitcoin, and the Bitcoin bulls are still fully in control of this market, and they have just marching Bitcoin higher and higher. We're still closing above the 5 EMA, and we still have that extremely strong bullish trending. So Bitcoin's price target is still set at $17,000, and it looks like we're going to be there very soon at this rate. So in the financial sector, we see we're still getting bullish price action and bullish trending, but it looks like we may have gone too far too fast and we're due for a cool off. A similar story on the industrial, it looks like we possibly went too far too fast and we're starting to get some consolidation at these higher prices while we start getting some digestion of that recent move before we start heading higher. Also on healthcare, we see a very similar sign where we went too far too fast, and it looks like healthcare is just consolidating at its newfound highs. Next up is Boeing, and we did see that Boeing tested the 200 simple moving average as support. So if we start bouncing off of the 200 simple moving average and heading higher, it's likely that Boeing is going into the real deal bull market and we finally see that bullish breakout. So this could be great news for the Boeing bulls, but we still want to see a confirmation bounce and a continuation of the support level. Remember last night we talked about false breakouts, so we don't want to make any assumptions. We just want to wait and watch the price action tell us that we're going back into that bull market on Boeing. So going back to the S&P 500, don't forget we got the Stocks Channel Discord, and you can find out how to join that Discord server in the link below. And we're still expecting to see a cool off in the S&P 500 before we want to become too bullish and buy the dip. We don't want to just buy something that's going higher because that's what the FOMO crew does, and we know the FOMO usually is the ones that get burnt the most. So we want to be patient and we want to wait for that dip, and we want to find which levels of support that we're going to get that bounce before we decide to go long on this market. Patience is the name of this game, and those that have the most patience are going to get the best entries and will have the most clarity on this market. Right now it's going up in a straight line and it's going high flying in a short amount of time. So we just want to be patient and we want to wait for that cool off and that eventual dip that we know we're going to get. So please help me out by smashing that like button. And if you're new, go ahead and smash that subscribe button so you can follow along with all of my daily updates. Thanks for watching, everybody. Good luck out there. And as always, I will see you in the next episode.